From inclusive finance to sustainable economies, Africa is building its future. This is The Sound of Progress, a podcast by FSD Africa. This is Financing Africa's Future.
Today, we are very pleased to be joined by Cecilia Murai, Principal Sustainable and Green Finance at FSD Africa. It's our real pleasure to have you, Cecilia.
Thank you so much, Cara. Thank you for inviting me.
I like your title, Sustainable and Green Finance, and I'm quite curious to know, what does that role entail?
So at FSD Africa, where the core focus is on domestic capital and financial market development.
Right.
Sustainable finance means so many things because it means that you need to integrate sustainability across the capital market development. So in policy and regulation, in transaction and project development, and also in engagement with the investors that we want to invite to invest in these instruments. The point is to mobilize finance that is patient and productive over the long term.
Sounds exciting, Cecilia. Quite a broad role, I must agree. What aspects of the work that make you most excited? What make you really tick and happy every morning to report to work?
The great thing about sustainable finance is that it gives an opportunity to really use sustainability and new progressive financial models and structures to find solutions to critical challenges.
Yes.
So as I said, that can be across a spectrum of things. And really the important part is to identify what the core challenges are and try to focus in on those, and then you move on to the next. But something that we are increasingly focusing on as part of a funded program is support for development of sustainable sovereign finance instruments. So that's quite exciting to me. There's a lot of potential impact, positive impact there. So that's really an exciting area.
Cecilia, I'm aware that FSD Africa is doing quite a significant capacity building work with the many actors in the market to help deepen sustainable and green finance approaches across the continent. And maybe you could speak to us about the work that you and the team are doing in that space.
Absolutely. I mean, sustainable finance entails developing new products and instruments,
right.
Whether this is in sustainable bonds, sustainability-linked bonds, or debt for development swaps. There's quite significant project planning and development that goes into that. And so, yes, we provide the technical support and capacity building across the value chain. So with the regulators, the capital market authorities, stock exchanges, and so on, how to create the enabling environment for these products. Also with issuers themselves on how to plan and take these issuances to market. And also with investors, investor sensitization around how these investment opportunities are better than non-sustainable, non-green investment products. And also additionally now working increasingly with debt management offices in terms of preparation and planning for sustainable finance instruments in the context of liability management operations, so debt management and reprofiling.
I know FSD Africa has been in this space of sustainable and green finance across the African continent for quite a while. And I wonder, how is Africa faring in terms of a green and sustainable finance?
So the African continent it has great opportunity. It's the wealthiest continent, arguably,
right.
on this planet. And it has great wealth and massive infrastructure that needs to be developed. So there's great investment opportunity on the continent, but we need to do more to create the investment products and instruments that can allow also the massive amount of capital that exists on the continent, equivalent of $3 trillion sits with African institutional investors. And so we need to do more in terms of creating the investment instruments and opportunities that can allow that capital to flow and to take part in the wealth creating opportunity that is there on the continent. And what I would say also is that when we talk about sustainable finance and investment, it means different things in different parts of the world,
Yes.
right? So let's say in the US, perhaps the conversation is more around sustainable investment. You may have $100 billion portfolio, passive sort of investment mandate, and there you're looking at how can we tweak that portfolio to be a bit more sustainable, have a bit more weighting towards best practice sustainability. In Europe, the focus is very much on climate mitigation, climate change. On the African continent, it's really about creating the investment opportunities, the instruments and investment opportunities to further build a sustainable future on the continent.
I know one of the branches of your work that you speak and are passionate about is African green taxonomy. Let's try to define that and break it down in simple terms. What is taxonomy, and why should we care or spend our efforts on it?
Taxonomy is simply a list of economic sectors and activities that are considered sustainable over the long term. So it defines what that means, let's say in agriculture, infrastructure, manufacturing. And taxonomies have become important decision-making tools for investors across the world. Now, the challenge that we have faced as we work, FSD Africa has supported some 25 green and sustainable bond transactions on the African continent. And one of the challenges is that these taxonomies have been developed in other markets to date. So they are developed for foreign markets.
Right.
And that means that there's a mismatch, in terms of the definition of what green and sustainable looks like. And so we found it important and relevant to join an effort to develop the African Sustainable Finance Taxonomy. That's an effort that has been has been done for the past 1 to 2 years,
right?
With consortia of partners and the commercial financial sector on the African continent, and this was supported by the African Development Bank. And the purpose was to develop a context-appropriate taxonomy for Africa. The pioneering thing about it is that it puts social objectives and impacts at the same level as environmental impacts, which is really critical because of the new development that needs to be done on the continent in infrastructure, manufacturing, health, education. It's just very different from the market development in, let's say, Europe.
How far are we with this work? I know you've been on it for quite a while.
So the first version of the taxonomy is ready. And I think there will be some pilot bond issuances that will actually use the African taxonomy in the coming year. As with all these regional taxonomies, it's not a static thing. The taxonomy will evolve over time. It will cover more sectors over time, and it will also get into more detail around sort of technical screening criteria to become a little bit more technical. But for now, it's ready for use for pilot bond issuances.
Well done on that, Cecilia. Something that you've mentioned that has really piqued my curiosity is the number of transactions and instruments that FSD Africa is helping deploy to drive and deepen sustainable finance and green finance. Maybe you could speak to us and give us some of the ones that are really quite exciting and make you really happy.
I think all of them make me very happy. The opportunity is great. So 25, it is, it's a portion of all the green and sustainable bond transactions that have been issued on the continent over the past, let's say, 5 to 7 years. And that has been on a fast increasing trajectory. So coming from a low base, there is great growth in these sustainable green bonds. relatively safe and familiar asset class for institutional investors to get involved in as they want to perhaps expand and test investments in the sustainability space. So that's why this instrument and these bonds hold great promise. And FSD Africa has supported sustainable bonds across different sectors, different sizes of bond issuances, both in the private sector, so banking and non-banking corporates, the sub-sovereign space, so this could be municipal bonds, and we have supported the first sub-sovereign green sub-sovereign issuance on the African continent. That was with water utility Tangawaza in Tanzania. And we are currently also working with other state-owned enterprises,
Yes.
and also with the sovereigns, the national treasuries and finance ministries directly on their the planning and preparation of sustainable finance instruments. A great example, the Acorn green bond for student housing.
Yes.
It's an example of where the private sector was able to come in and finance and build social infrastructure that typically perhaps the government would be responsible for. But this is an example of where the private sector can come in and finance social infrastructure and take pressure off the government balance sheets.
I like that example. Of course, we are all aware about how student accommodation here in Kenya and across many other African jurisdictions is quite a strong priority. So really good to see that some of the instruments are helping plug that demand. I think 25 transactions are quite a successful measure by any measurements. What sort of amounts have you been able to mobilize through these instruments?
So to date, it's around $1.7 billion equivalent, most of that in local currency. And we, as FSD Africa, we have a target to mobilize an additional over $10 billion equivalent in the next 5 years.
Let's talk a little bit about the debt situation in Africa. We keep seeing many reports talking about that a number of countries in Africa will be facing a moderate to significant debt distress. And I'm aware that one of the programs you help run at FSD Africa is Sovereign Debt Advisory. So help us understand what exactly you are offering through that program.
Yes, sure. So, I mean, sustainable finance at this point in time offers a great opportunity also in the sovereign debt space because it's an opportunity in the refinancing efforts of either expensive debt, or if you have a payment wall coming up. Sustainable finance can help in that refinancing process and secure financing at better rates and longer maturities. So really smoothening profiles and easing annual sort of debt payment pressures and creating fiscal space for other investments in development. And the attractiveness of these sustainable finance instruments is that they also bring transparency and focus on investment in productive projects and assets that contribute also to long-term economic growth. So it can help both on the economic growth side by focusing on investment and prioritizing investments in productive assets. At the same time as that, it can help in the reprofiling effort and smoothing out debt profiles. And these strategies in combination can also be part of the effort to get better credit rating, credit sovereign rating over time, and thereby further reducing the cost of capital over time.
I mean, it sounds quite exciting and really important work. And I wonder, how big is your program? Are you able to support 5, 10, 20 African countries?
I think we have a sizable program. It's funded by the UK government, FCDO, and a philanthropic partner, CIF, the Children's Investment Fund Foundation. There are other government partners, the Multilateral Development Bank, regional development banks,
Yes.
other philanthropies
Yes.
that are all interested in finding out how they can be part of finding the solutions to the debt situation on the continent. And so I think we have a sizable funded program available. Finance ministries and debt management offices can contact us, and we will then go through a process of establishing what kind of support is requested, and a work plan and so on. And that program can be scaled. If we achieve good results, that program can be scaled. So the idea would be to have a funded program available for DMOs and finance ministries on the continent going into the future, so that these challenges can be addressed preemptively.
Yes.
So before it becomes
Before it becomes
a challenge.
problem.
Yeah.
I mean, I really can see the connection. Are we saying that then the debt distress that is being experienced in a couple of our jurisdictions, it having a direct negative impact on green finance and across the continent?
Yes, absolutely. I mean, so FSD Africa's core work over the past 12 years has been on domestic capital and financial market development.
Yes.
And if countries go into debt distress, that will obviously have an impact on the private sector and the capital market development, because rates become very high, very expensive to access capital.
Yes.
And there's also the crowding out effect. I mean, as the government seek to borrow more, this crowds out the opportunity for the private sector to access capital.
Yes.
Because also from the investor side, I mean, that's a great, the returns are so high basically on the government instruments.
Right. Cecilia, as we draw to a close, we have seen in the recent couple of months that donor aid, as we traditionally knew it, is been declining to a large extent. And FSD Africa does work towards deepening and making African financial markets even more sophisticated. Do you think that the African capital markets, domestic markets, will rise to the challenge and be able to fix the gaps that are being created by the shrinking donor aid?
Oh, absolutely. It's critical. And while we are doing that, we can still use the sort of the aid and ODA money that is available, but also bringing in new partners, philanthropy and so on, but be really clever about how to use that capital
Right.
to leverage the private sector and to build the enabling environment, the domestic capital markets, so that the capital that is available on the continent, the $3 trillion US dollars equivalent at the moment and growing, that needs to be invested in the productive economy. So using the funding that is available to build those markets, and that will be critical for the future.
Wow. Thank you very much, Cecilia, for passing by, and all the best with the really important work that you're doing, across African financial markets. Any closing thoughts?
Africa contributes less than 3% to global greenhouse gas emissions, for example. However, Africa also receives less than 3% of, let's say, the global sustainable bond market, which is massive and growing. Africa has the $3 trillion in institutional assets available for
Right.
productive investment across the continent, and sustainable finance can really help, improve the threes that are not good, and so it's all putting it in context of that picture. But sustainable finance is really meant to optimize solutions and attract and blend concessional finance with private sector finance to enable more of the private sector flow through blended finance instruments, and green and sustainable finance is really a core part of that.
Thank you very much, Cecilia.
Thank you so much, Cara. Pleasure to be here.